Good morning, traders. It is Tuesday, the 5th of July, 2016, day after Independence Day here in the U.S. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Key news items overnight come out of the Bank of England. The BOE's Financial Policy Committee cut its counter-cyclical capital buffer for UK banks to zero from 0.5%. The committee says the buffer will remain in place for at least the next year as the economy deals with the uncertainty of the Brexit vote. The British pound, as a result, dropped to a 31-year high. It's the weakest it's been since 1985, September of 1985. Australia's central bank, the RBA, held its interest rate unchanged at 1.75%. The Australian dollar is down 0.5% at 0.7500. European PMI data was disappointing. The data for June, which was collected before the UK decided to leave the Union, showed that Britain's industry suffered its worst quarter in more than 3 years, printing 52.3. Germany's services reading dropped to 53.7. France's sank to 49.9. And then Italy's third largest bank needs a bailout worth 3 billion euros. The stock is down 7%. And those are the key elements that came in this morning that are driving things somewhat. And other than that, we're looking at a week ahead, given it's the first day of the week. We'll look at the weekly calendar. And this week's calendar has, well, let's look at today first. Today we get ISM New York at 8:45 Central, 9:45 Eastern. We'll get durable goods at 9 Central, 10 Eastern, expecting negative 2.2 and negative 0.3. Factory orders expecting negative 0.8. And IBD tip economic optimism for July expecting 48.3. As far as speakers today, we have a slew of them. We had Carney this morning at 0500 Central at 6 a.m. Eastern. At 8:05 here, in about 1 minute, we're expecting ECB Speaker Mersch, who's a hawk, unveiling a 50 euro banknote at the ECB. At noon Central, 1 Eastern, ECB Speaker Lautenschlager, who's also a hawk, giving a speech. At 1:30 Central, 2:30 Eastern, Fed Speaker Dudley. And at 2:30 Eastern, 1:30 Central, also Fed Reserve Board selects interest rates daily update. And then on the weekly, looking at tomorrow, Wednesday, the key numbers coming out are German factory orders, German construction PMI, U.S. mortgage applications. We also have trade balance at 7:30 Central, 8:30 Eastern in the U.S. Services PMI final at 8:45 Central, 9:45 Eastern, and ISM non-manufacturing at 9 Central, 10 Eastern. And the Fed releases its meeting minutes from the June meeting, June 14th and 15th. That's tomorrow. No oil because of the holiday. And then on Thursday, we get a UK manufacturing production and industrial production. We also get the U.S. Challenger job cuts, ADP employment, which is a precursor to the non-farm payrolls. We also get crude oil inventories and distillate, as well as gasoline inventories on Thursday at 10 Central, 11 Eastern. And we get ECB Villeroy speaking in the morning. And then Friday is the big day. Friday, we're getting non-farm payrolls and unemployment at 7:30 Central, 8:30 Eastern, expecting 180,000 for non-farm payrolls, unemployment at 4.8%, average hourly earnings month on month adding 0.2%. We're looking for consumer credit at 2 Central, 3 Eastern. ECB's Lycanen expected to speak that day. That's what's on deck for the week. That's a preview of the entire week. Now, let's shift gears and look at what we expected for Friday versus what we got. Here's the view of what we saw for Friday. Friday, the expectation, given the type of action we've had and the fact that we've had 2 trend days in a row, the expectation is a test higher that finds sellers and fails to continue rotating down and pushing towards the mid of the Brexit gap, which remains at 77. The reason I still have this gap zone open and on the flex chart, and the reason I have it open is because we've tested this from below right here, but we have not tested it from above yet, and it will remain, since it's such a significant gap, it will remain on the charts to see how the market responds to it. And the market is trading this range right now. The market's at 2085. It's somewhere on the high end of the range, but it did get down lower overnight. The overnight low is on this chart. 81. 77 is the mid of the Brexit. So this hypothesis did not work out. Hypo 2 is the one that did work out. Hypo 2 asked for or expected a choppy open, and then the expectation was for a push initially to 96.50 and then eventually towards the Brexit scene of the crime, which is 2106.75. 2106.75 is the scene of the crime for Brexit. That's where it all started from. On the day of the Brexit, right after the reopen on Thursday's session, the market went up, pushed into new highs in the Globex session, and then it tanked after that as the votes came in. So that's where we are expected to head. So this was hypo number 2. Yeah, hypo number 2, and that's the one that worked out. As I said on Friday's video, it's really important to look at how these hypos are supposed to be used, and they're not intended to be some sort of a prediction. I know a lot of viewers, because I get emails about it, a lot of viewers think that I'm somehow predicting what will happen for the session, and by providing more than one hypo, I'm just keeping my options open, and that's not what this is. What this is to have a plan, hypo 1 through at least hypo 5, to account for the 5 basic situations that you can find yourself opening in. And then I highlight 1 and 2 because the overwhelming majority of the time, 1 and 2 are the ones that end up working out, and that's what I have time for. So the hypos again are intended to give you a plan for what the auction will likely look like on a longer term basis. I am not discussing with you how to trade once the hypo is shown to be holding true in the market. I'm not discussing how I'm executing on it, because that's covered in webinar 5 on my website. It's just too much detail for me to go over right now. Let's take a look at what we've done since. Actually, again, let's look at what has happened. So this was Friday here. We had a pretty strong open, pullback, and then we continued to push all the way up to 2175, and then the market just went into this channel, as you see here, this channel, and it traded that channel back and forth, back and forth, back and forth, back and forth, until near the close, where it broke it, pulled back to it, and then basically traded into the close right in the center. The profile for Friday is somewhat balanced, with pretty good kurtosis in the middle, 2095, 2095.75 being the point of control, and that's the area we want to pay attention to today. Also, the value area for Friday is valid. So the value area is 98 and a quarter down to 93 and a quarter. Any tests up, for example, if the market decides to attempt lower and trade up, and that's what I'm expecting, then I'm expecting a reaction at 93 and a quarter, initially pull back, push through to the point of control. Then if it has any power left in it, it would test 98 and a quarter next. Again, this is a balanced profile, therefore the value area is valid. What have we done since? So I've eliminated the Globex session because it was a holiday. I've eliminated it from my charts, so it will not show up here. The session, the Sunday, 5 o'clock until yesterday, 12 o'clock Central, or Sunday, 6 o'clock to yesterday, 1 o'clock Eastern. That period is completely eliminated from my charts. I've removed that data. It's holiday data. It's not meaningful. And what we're looking at here is a market that traded up a little bit yesterday, and then has given that up in the Globex, in the Asian session, and is unable to return and test higher. And what we've done essentially in the Globex session is to trade all the way from top to bottom, essentially missing the top by a couple of ticks. We're testing. We have traded all the way through with a B-shaped profile. So this is a B-shaped profile here, shows long liquidation to balance, where the market moves quickly down and then finds its buyers. And this is what it looks like when it finds buyers. Volume starts to come in, and then you get two-way trading, and then the market balances. And that's what long liquidation looks like. The market liquidates longs, buyers become sellers to a period of time where fresh buyers step back in and hold the market in place. So overall, we're trading almost exactly the same way as we did for Friday night's trading, Friday session Globex trading, and we are back in balance with the initial trend day from Thursday. So what we're executing right now essentially was Hypo 1 from Friday, but we're doing it today. We have a string of singles here that's very important to note. Let me bring that chart in. This is the market profile chart. And you could see that there's a string of singles down here with very thin volume, very thin TPOs, a second string down at 70, between 70.50 and 69.50, and then the first string is between 80.50 and 78.50. So I'm looking for it to fail through, get down into the mid of the Brexit gap from the top, close these singles, and I'm looking for a bounce back up. So let's sum up and look at what our hypos are for today. I'm out of time. I have a minute left. Our primary hypothesis for today. Is the expectation is for an open auction out of range. We're opening in this lower balance up against the LVN zone, which is also the single zone on the market profile. The expectation is for us to make an responsive attempt higher. I'm expecting it to get challenged at the Friday low. If not, then I'm looking for 93.25 to challenge this, pull back, base, and then tag that 2095.75 as the primary hypothesis. In other words, the primary hypothesis is responsive. Why is it responsive first? How do I come up with that? The reason is that the overall auction has been strong on the buy side. And that's not likely to change. The trade so far, if we look at how this has traded from the low, from the Brexit low, this is a fundamentally driven trade. This is somebody somewhere. This is OTF taking large positions on the buy side, causing the market to move up with gap zones beneath. So this is not likely to change. The fact that the Bank of England has reduced rates is likely to spur that on, that there is likely to be stimulus to offset Europe's issues. But I'm looking for that to continue. Now, the better trade as a trader, the better trade is actually hypo 2. And hypo 2 is to test higher first, fail, and then start to move through. And then the first target is likely to be the 77, which is the bottom of the singles, and the gap zone mid, and then for it to start moving back down into the lower range. That's hypo 2. So for hypo 2, I'm going to stock to see what the reaction will be at the prior day's low. If not, then I'm looking at that 93 quarter for a short. If I can find a rotation. So am I going to stand in its way? Am I going to put an offer out there at 2089 at Friday's low and just hope that the market doesn't just blow through it? No, I'm not. What I'm going to wait for is for it to trade up, fail, and then make an attempt, fail, and then jump on. It's okay for me to take the trade lower. I'm taking some price risk here and start to look for 2077 as a target. That would be the main trade for hypo 2. Okay, I hope that explanation is clear enough to help you see how this all fits together. Anyway, that's what we have. Non-farm payroll at the end of the day, but also I want you to know that I'm traveling this afternoon. I will be doing a pre-recorded, or I'll do my best to do a pre-recorded Trader Bite for tomorrow morning, Wednesday, and then there will not be a Trader Bite on Thursday. There will not be a Trader Bite on Thursday. I will be traveling back early in the morning, and so we'll not have time to do that. Stage 5 traders, our AMA is being moved from noon to 3:30 on Thursday. The weekly AMA that we hold for Stage 5 will move from noon to 3:30 just this Thursday. I hope to see you there. Thanks for tuning in. Take care.